Jane, initial reaction?
Well, really, this means that we've got very little to talk about at the next meeting, because some of what we've heard today really was expected to come, as you already said, in April or so. So he's brought forward the announcements, basically. A lot of people were talking about telcos, of course, but weren't expecting an awful lot of detail. We've got a little bit more of a framework now. So again, he's decided to bring this forward, to calm down the markets, to tell the markets, look, if you're worried about a slowdown, we're here to hold the bank's hands. We will lend them cheap money if they need it. So really, this is a reassurance to the market, and he's taken away the potential for the market to carry on speculating over the next 4 to 6 weeks until the next meeting, as obviously they would have done had he not announced this detail today.
So Bob, this is maybe whatever it takes? I mean, to quote Mario Draghi from earlier, is this basically whatever it takes, and will it have effect?
Well, it's the right policy decision, so I commend the ECB to do the right thing now as opposed to wait a few more months and take the risk that the data only gets weaker. And so they've learned their lesson that it's important to be ahead of that risk and to be proactive. And so again, I commend them that they actually, for once, got ahead of the anticipated policy change.
But what confuses me is sort of, why do we need the long-term loans? This is not 2012. Like, these banks aren't starved for liquidity in the same kind of way.
It's not about the loans. It's about the signaling. It's about showing intent to do what's necessary in order to support the broad economy. There's only so much that the ECB can do from a strict monetary policy perspective. They're going to need more help on the fiscal side, more confidence in the private sector to invest. But what those other decision makers want to know is whether or not the ECB has their back. And that's exactly what they showed today.